Hello, and welcome to this highly anticipated Global Risk Dialogue 2023 with Confluence Consultants. So before we get started, just a little bit about who we are and what we do. So we are Confluencers. We are a group of people coming together with our intelligence, our networks, trying to pool our resources together to create a world that can be described as more predictable and intelligible. And through this webinar today, we hope to provide you with intelligence that is actionable, that is non-conflicted, and is unbiased. So what makes this webinar a little bit different from the others is that we have looked at all of the global trends, regional scans, and business trends through several angles, and we've tried to bridge the gap between the existing Western narrative and the global South. We are a niche team. We are led by Ms. Shraddha, who everyone is familiar with. Her experience in the business strategy and intelligence advisory space is immense. We also have with us a partner at Confluence Consultants, Nicholas Michelon, who's going to speak later on this webinar. His experience is also in the strategy space with a focus on the Indo-Pacific region. And my name is Amandeep Ahuja. I'm a research specialist at Confluence Consultants. The services that we can offer through Confluence Consultants include market entry feasibility and strategy, operational risk management, specialist risk advisory support, geopolitical risk analysis. You can also follow us on our social channels. We are available on Instagram at Confluence Consultants. We have our website live, which is confluenceservices.com. And we are also available on Twitter, ConfluenceDXB. So we are now ready to kickstart the webinar with our speaker, Ms. Shraddha, who is going to kickstart this with our presentation on the global trends, regional scans, and business segments. So over to you, Shraddha.
Thank you, Amandeep, and a very, very warm welcome to all of you. Thank you for taking out time for this inaugural webinar. The sort of support that we've gotten on social media channels and the people here has been very overwhelming. So when we started thinking of this entire exercise, we were going to only look at the larger sort of geopolitical and political trends in terms of scanning. But as we sort of sat down, brainstormed, spoke a lot about it, the idiom that there is politics in everything, that came to our mind. It just meant that there is geopolitics in everything right now. And everything geopolitical is impacted by the larger business segments, whether it's technology, whether it's financial systems, whether it's payment modes, etc. So it kept getting expanded. We kept expanding the horizon till the report became very interconnected between a global, regional, and business segment scans. It just meant that we had a lot of sleepless nights, but what we've produced hopefully will add to the spaces that you already know about. So before we begin the presentation, I'd like to release the Confluence Global Monitor 2023 Risks and Opportunities. I will just share my screen and take you through the report, the main sort of indexes and the topics that we've covered. Just give me 1 second. Great. So this is our, just 1 second. This is our Confluence Global Monitor. If you can see the table of sort of contents here, we have looked at a global scan in terms of 5 major trends. We've then honed on to regions and some very, very interesting business segment analysis, right? So an economic outlook, the sort of tech rivalry that's emerging, the energy trends, technologies of the future, international trading system, and the global financial system. So without further ado, let me now just give you a brief idea about what are the major trends and themes that we're looking for in 2023 and how they impact you as stakeholders, whether you're a business person, whether you work in a research organization, you're a diplomatic mission, or other forms of engagement. Once again, let me share my screen. Technology is always baffling. Okay, so here we go. I'm just sharing the screen. Okay, what a year we've had in 2022. I'm going to begin from 2022 because it was the year where all models of risk assessment, of horizon scanning, of scenario gaming were challenged. Russia's invasion of Ukraine broke the fragile peace that we'd all come to rely on. Along with COVID, it raised questions on the sort of vulnerability of globalization 2.0, the disruption in supply chains, questioning the model of the China growth, and the chinks in the unipolar world order that's been led by the US. Now, everything in 2022 was weaponized, from energy to commodities to resources to threats of rare earth minerals and the energy transition. It really brought home to businesses that geopolitical threats were imminent. Key resources could be taken off the table in an instance. For example, Russian gas. The areas that you were operating could become hostile in almost an instance, and lawfare, political backlash, and sanctions were a clear and present danger. Very interestingly, it was also the year when mid-powers, who have traditionally punched below their sort of economic and political weight, really came to the limelight. We saw that in the G20 summit. They forged self-interested, unified alliances that in very fundamental ways are challenging the global trading, financial, and political system. Right? So from India to Turkey to UAE to Saudi Arabia, is it really minilateralism emerging as a challenge to the US-led unipolar order? A lot of these trends are going to continue in 2023. I'm just going to just look at the slides right here. It's a world between orders, right? So just to set the context, the world is going to move in according to three trends, which I called COVID, conflict, and climate change, with much broader sort of emphasis. COVID basically signifies black swan events, things that can happen very quickly and have a disproportionate impact. Conflict is about breakdown of trust in the global affairs, whether it's economic, political, or military. And climate change is the long-term structural changes that are taking place in the world, obviously in terms of climate, but also in terms of aging populations, in terms of the financial models that are available in the world and how that's going to pan out. So within this framework, there are 6 key trends that we are looking at: heightened conflict stress points in 2023, metamorphogous alliances, and for the Harry Potter fans here, you know what I mean, but I will also explain. Economic doom and gloom, nationalization and weaponization will be the name of the game, a painful energy transition, and a clash of civilizations. Right, so let's roll in with the first trend. Okay, so I love, as a geopolitical analyst, I love maps. It just gives you a fair idea of where are the risks you're looking at, along with the distribution of resources, people, power, etc. So just to have a look at this map, there are a lot of conflict areas in the world, there are a lot of conflicts that are going around, but we have focused in 2023 on the ones that are caused by changes in the global order, in the sort of superpower rivalries, in the way that a world between orders is emerging. Right, so I will not talk too much about Europe, because our expert Nicholas will be covering that in his piece in the webinar. And I'm not going to say too much about Ukraine as well, because a lot has been said about it already. Now, in 2023, I think the world will learn to live with the stalemate in the Ukrainian war. The red lines on both sides will make it very difficult to either come to a peace agreement or to escalate the conflict further. And even if some sort of peace agreement sort of comes about in the next 1 or 2 years, the Ukrainian saga is only beginning. But Ukraine has a lot of collateral impact that I would like to highlight here. We already know about the rocket that landed in Poland, and it almost led to a worry that the NATO collective security mechanism will be sort of invoked. We have Poland and the 3 Baltic states that are pushing for obvious reasons, for a more aggressive policy towards Russia, heightening the risks in this region. Sweden and Finland, after years of remaining neutral, have applied to join the NATO. You've got countries like Moldova and Georgia, where Russia controls parts of their territory, not officially controlled, but these are hubs of sort of Russian forces, of criminal activities, of the money that Russia derives to then fund its paramilitary groups like the Wagner Group. So, and most of Europe is in the eastern part is a war zone because of what's happening in the Black Sea area as well. From Europe, I think the eyes in 2023 will definitely turn to the Indo-Pacific. I think it sort of Ukraine took away the attention of how much militarization has been happening in this area for some time now. Japan, most notably, has been outside of itself. It's now come out of its self-defense mode with an increase in almost 20% in its defense budget. But everyone from India to Vietnam to Philippines to, of course, China have been militarizing. There are disputed areas in the Indo-Pacific that have gained prominence because of artificial construction of islands, etc. And of course, Taiwan is looking at Ukraine very, very closely, and the Asian countries for a long time have kept away from any of the sort of military implications of alliances, etc. Talking about the fact that trade trumps conflict, but now you have two military/geopolitical alliances focused on this area. There is AUKUS, which is Australia, US, and UK, and the Quad, which essentially is a geopolitical mechanism to contain China, and all of that is being blessed by and led by the US. I would also like to point out very briefly the area where peace was maintained because of the force field between the two superpowers, US and Russia, however imperfect that could have been. With Russia diverted in Ukraine, conflicts that have been dormant for a number of years are now rising up again in Central Asia. And you know about the Kyrgyz-Tajik border clashes in 2021 again, when last year. In Afghanistan, where the Northern Alliance areas that are controlled by the Northern Alliance are heating up again. In Mongolia, you had coal protests, very similar to the color revolutions in Ukraine, for example. In areas where Russia is the security guarantor and China the economic partner, I think these risks will be heightened. Africa, we've just touched very briefly. I've picked up these examples, although there are conflict areas across Africa, is to highlight how the superpower rivalries are playing out here. Mali, for example, Burkina Faso are areas where the French forces and control are sort of withdrawing. And a lot of the security aspects are taken over by the Wagner Group, which is Russia's paramilitary force. Ghana hosts a US military base. Last year, there was an incident where a minister from Ghana made a comment about the Wagner Group's influence in Mali and Burkina Faso, leading to quite a bit of diplomatic row. Libya, as we know, has a number of forces competing within the country. What really is happening is these inter-country rivalries between the global power, which is really manifesting in Africa, is increasing the stress points between the different states in Africa and possibilities of clashes. So this is a map of the heightened conflict stress points. There are more that we can discuss in the Q&A sessions, but let's move on to our next trend, which is metamorphogous alliances. You know, for those of you who are Harry Potter fans, metamorphogous is essentially shapeshifters, right? So these are essentially shape-shifting alliances. As I said, it's a world order which is between orders. We're moving from a unipolar world order, but nothing has replaced it yet, right? So you've got US and its allies on one side, and China, Russia, and its opportunistic partners on the other. And in the middle, there are a host of these multiple mid-powers that are pursuing independent foreign policies. They are pursuing their own mechanisms of doing things, and that's creating a very uncertain world. You know, I would very closely look at the emerging bonhomie between the energy-rich Gulf Cooperation Council countries and China, because it has implications on how the payment for oil will be made. So you've got the petro-yuan narrative floating around, the Iran-Russia bank linkages, stablecoin, central bank digital currencies, increasing bilateral trade between these emerging economies, something that Ghana propounded, which is gold for oil. And then, of course, OPEC plus versus the West has been identified enough. There are very concrete sort of opportunities or sort of motivations for these countries to be taking these independent foreign policies. For Saudi Arabia, for example, their trade in oil with China is now 30%, as opposed to US, which is only 5%. Ghana, which is one of the largest producers of gold, has really suffered from a stronger dollar in the international arena. So it's their proposal that there is a mechanism for gold for oil. So and plus these countries are also following their independent foreign policies. Turkey is a prime example in terms of the conflict areas in the region and also in Eastern Mediterranean. So it's just an uncertain world which was pinned by the US might, whether it was a security architecture in Asia or the kind of alliances that the US oversaw to maintain some bit of semblance of certainty in the Middle East, that's eroding. Let's move on to our third sort of trend area, and that is economic doom and gloom. Enough has been said about this. Recession, hard landing, soft landing, Chinese reopening, labor markets, etc., etc. Everybody from the economic pundits to geopolitical analysts have weighed on this. The fourth quarter results have been a little encouraging with a 0.1% growth in the Eurozone economy, which was supposed to contract, a better Chinese reopening than was anticipated. Sort of better numbers in terms of CPI, consumer price inflation in the US. So that's sort of masking the fact that the world still remains a very uncertain place, right? That the world economy is balanced on a world which is in a perma-crisis, to use the Collins Dictionary's favorite word in 2022, which essentially means that there are layers of uncertainty, and any event at the top can just tip it off into a phase of doom and gloom, right? So there are 4 things that I have highlighted here. We can discuss more in the Q&A session. The Russia-Ukraine uncertainties obviously continue, but there are conflict stress points emerging sort of within the global structure. We've done a poll, and most people think that Taiwan will eventually be invaded by China or taken over by China. We'll just have to see how that pans out. The superpower rivalries, as I said, in which key resources can be taken off, geographies can become hostile, critical sectors of your supply chains can come under sanctions. A painful and fragmented energy transition. We will discuss this a little bit in detail, but the shift from high carbon to low carbon, swamped by the politics of and geopolitics of how the world is evolving, will cause a lot of uncertainty in the financial markets. And the structural shifts related to climate change, demographics, aging populations, it just seems that a lot of these sort of variables, especially inflation, etc., are very, very new to the world arena. We've not seen them in a couple of years. So policymakers have few innovative measures to deal with the perma-crisis. But it is where there are risks, there are also opportunities. So a number of economic and segment opportunities are going to open up, and some of our speakers are going to discuss this when they talk about India or countries in APAC or in the Middle East. Let's move on to our next trend, which is essentially nationalization and weaponization will be the name of the game. By this, I don't mean that the trade that's growing in the world is going to stop, or that businesses will sort of stop moving around in the global arena, because while economic incentives for globalization continue, the geopolitical and political certainties that underpinned the US-led world order are gone. Now, there was a joke for the longest time that it was Apple that maintained peace in the Indo-Pacific because of the spread and in a number of countries, including China, Vietnam, Taiwan, and that created incentives for peace within these countries. I'm going to just take 4 examples to sort of highlight how this nationalization and weaponization works and what are the broader implications of that. So last year, $300 billion of Russian forex reserves in the US banks were frozen, which means a country has no access to its own forex reserves if you're not aligned with the US foreign policy. The second one was the whole politics of energy, where the sanctions on Russia basically implied 2 things. It broke 2 golden rules. Firstly, too big to fail energy security, right? So if it was Russia today, it could be the GCC countries tomorrow that are not aligned with the West. And the second one was the price cap, which was essentially a mechanism by the buyers to control price, which has been traditionally dominated by sellers. I suspect the cut in production that came in October by the OPEC Plus was a response to this weaponization of oil and gas by the Western sanctions on Russia. The third one I'd like to mention is the US export control. They're not even restrictions, they're prohibitions on the Chinese high-tech, especially semiconductors and chips. For the first time, some key elements were taken into account. Firstly, it removes all distinction between civilian and military. Not only the products cannot be sent to China, but any company that makes the parts of the products that are required or the equipment that's required for semiconductors and chips cannot be supplied to China. No US-born persons or having any links to the sort of citizenship structure in the US can aid the Chinese in their development. The high-end chips, and we will discuss this in our trade patterns shortly, the nodes between sort of 3 mm to about 14 mm. The entire structure is controlled by the US, and it's very vital for development of AI, for military applications, for supercomputing, and can impact China in a significant way. The last one has been that China is now also beginning to retaliate in a sort of a very chameleon way. Last year, all the 5 or 6 companies that dealt with rare earth minerals, which are very, very vital for the energy transition because they're used in EVs and practically every other aspect, solar panels, wind turbines, etc., were brought together and put under one company, which directly reports to President Xi Jinping. There's also the China Anti-Foreign Sanctions Act, which means any company that is adhering to the US sanctions can be challenged in the court of law in China. The companies will have to navigate these aspects. So while the normal trade in sort of multiple supply chain areas continues, these are the things that will create uncertainties. The companies have to be ready for diversification plans, for exit plans, for being able to quickly move from one geography to the other. And people tell me that these are just high-end sort of sectors, but even cotton from Xinjiang is sanctioned. You know, we've got about 11,700 sanctions on Russia. You've got 8,000 sanctions on Iran. You've got sanctions on Venezuela. You've got sanctions on Myanmar. A lot of them done almost overnight, impacting in Myanmar, for example, the investment of a lot of Japanese and Korean companies. So a balance will have to be made in all of these aspects in 2023. The next theme is tensions between dirty and clean energy will create a VUCA market. VUCA is now a fairly known term in the risk sphere, but it is volatile, uncertain, and ambiguous sort of a market. This is my favorite, of course, because in an article in 2021, I'd written that the transition from dirty to clean energy is fraught with too many challenges. You know, it's not taken into account the geopolitical sort of uncertainties or the geopolitical power structures in the world, the politics of doing things, and also looking at where the storage and renewable technology is at the moment, right? So in 2021, for example, China faced massive hydropower failure because of droughts, and 9 of their key industrial provinces had to either shut down industries or power was very severely rationed. There's also in at least a couple of years back, the large part of oil and gas market was controlled by state-owned enterprises. So the likes of Gazprom, Aramco, ADNOC, etc., while only 15% of the market was controlled by the US and EU companies that have been really sort of impacted by class action suits, regulatory uncertainties, really bringing down their investments in these regions, right? So we've seen the impact of that when Russia invaded Ukraine, right? So in 2023, the writing is on the wall. We will have to move from dirty to clean energy. But in 2023, it'll involve a lot of Faustian bargains, bargains that are devoid of any sort of ideological values. It'll have to involve Faustian bargains with OPEC Plus, with a lot of LNG producers, which have problematic governance structures, a lot of security issues, and worse, a restarting of coal. Right? It also, what the Russian sanctions on the energy market have done, that it has split and fragmented an otherwise unified market. So you have, for oil, for example, you have 3 prices. You have the Russian price, you have the price cap price by the West, and you have a shadow price. There's a huge black market that's emerged in terms of fleets, in terms of insurance, etc., which are also banned by the European Union sanctions, which they actually control. So what's going to happen is scrambling for resources, countries trying to outbid each other. A lot of countries like Pakistan, like Laos, like Bangladesh, like Africa will be pushed out of this race, leading to a lot of inflation, cost of living crisis, and a very unpredictable market. Also, the transition itself to clean energy will be fraught with politics. I'm not going to talk too much about the splits within the EU, but this is between Germany and France over the categorization of nuclear energy in the green taxonomy. Nicholas will discuss this in his piece, but France is an area where 70% of electricity is powered by nuclear energy, and if nuclear becomes a part of this entire structure, then France will be the leader. the Chinese centrality in supply chains, about they control 70% of the solar panel market, a large part of the wind turbine market, the rare earth minerals, as I've already said, and increasingly even hydrogen electrolyzers, etc., are being made in China. It's something that they can weaponize and retaliate as the world goes on an offense against them. And high cost is something I would also like to sort of highlight here. You cannot build nuclear power plants in Hinchley, for example, that is being proposed in the UK, when you have such a high cost of high living sort of cost of living crisis in some of the European countries. All of these trends in the long run have massive geopolitical implications. The OPEC plus versus West I've already highlighted, but also new LNG winners. Algeria is one of the countries that can really benefit, Qatar. But that will really depend on how the policy and regulations in the move towards clean and sort of green energy will pan out, whether it makes investments long term in these LNG sort of facilities feasible. So let's move on to our next pattern, which is clash of civilizations. This is, I'm just going to touch on this very, very briefly. We've said enough about it. Resurgent Russia in terms of military and foreign policy resurgence. Inwardly weaker but more aggressive China. Yes, these two remain a threat, but I would look at more closely at an internally polarized and outwardly challenged United States of America. Right? So the challenge to the dollar is one aspect of it. Military conflicts, some of their key allies taking their own independent stance. It's going to pan out in a lot of ways, of course, through sanctions, through military conflicts, through the US interfering in a lot of these internal issues, but also something called the manufacture of the enemy. Increasingly, we're going to see polarization between so-called democracies and so-called authoritarian states, with a lot of backlash against each other. What that's going to do is that's going to erode the room that's available for negotiations, for talking on some of the key problems of the world, including climate change, including financial issues, including debt crisis. Since, especially after Russia-Ukraine war, the GDP to debt ratio has increased in a number of countries, leading to bankruptcy, default. All of that will really be very, very difficult to do. So that is our key global trends. Those are our key global trends. And now we move on to the regional trends, right? So we're going to start with the Middle East. So in the Middle East, we've said for a number of years that this is the region that's going in the right direction. There's especially since the Abraham Accords in 2021, there has been rapprochement in the region with which sort of positive consequences for the conflict. However, in 2023, we see more conflict and headwinds and less rapprochement. And so the three key trends that we are looking at in the Middle East is we just done a scenario gaming of what would disrupt, what would create the equilibrium, and where would that sort of equilibrium be construed, where the companies can take actionable business decisions. So what are the forces of disruption? There are hardline governments. There's a new right-wing government in Israel, which is disrupting a lot of trends that have been on in the region for quite a bit. There is the besieged Iranian regime with massive protests, which has taken to sort of demonizing the other powers in the region. Turkey in election mode, especially now with the earthquake and increasing conflicts in the Eastern Mediterranean. What are they going to do in terms of their foreign policy? A diverted Russia and Ukraine, which has massive implications for especially the Syrian conflict, and the political and the economic headwinds that have been caused by Russia's war in Ukraine. Egypt is one of the key examples with a plunging currency, a high cost of living crisis, and the imports becoming very, very expensive. We've also got Lebanon, which is now about 170%. Their currency has plunged, massive inflation. But Yemen, it's complicated, the conflicts in Yemen, where a ceasefire was not renewed. So these are the kind of trends that are causing disruptions in the region in 2023. But there are also forces of equilibrium. At the World Economic Forum, they describe the Middle East as an area of cautious optimism. The cautious comes from disruption, but the optimism comes from what the GCC countries are doing at the moment. They're really emerging as islands of growth, with UAE, with Saudi showing massive growth in the non-oil sector. There are very positive implications for economic sort of incentives being created for peace. Also, the high oil and gas prices in the last year have been channelized into sovereign wealth funds, which are creating regional dependencies. There is a Saudi Egyptian investment company, and the Saudis are now coming up with such investment companies in almost 5 countries. From the top 20 sovereign wealth funds in the world, many of them are in the GCC with $3 trillion in assets, which they are now deploying with a lot of sort of expert advice, I may say so. And minilateralism and collaboration in key sectors will continue. So despite differences with Israel, I think cooperation on technology, on food security, there is the I2U2 alliance. So India, Israel, UAE, and US, they're collaborating on 6 key focus areas. This is not to say that there will be no sort of competition between the GCC countries, which is very inherent in them. So you see an emerging Saudi Qatar bonhemi as opposed to a Saudi UAE sort of alliance, which has been in vogue for a number of years. They're all competing with each other. In a couple of years back, Riyadh made a law which said that all regional sort of headquarters will have to be in Riyadh, which led to issues with the UAE. So those are going to continue. But I think the equilibrium will come to the fact that there are triggers for conflict. There is unrest, there's disruptions, there is conflicts in Yemen, there are conflicts in Libya. Yemen remains a sort of a very, very fragile place as well. But the countries that have stakes in the region will strive to keep these localized while building economic interdependencies. 2 conflicts I will very closely watch are Syria, because ironically, Russia kept some semblance of peace in Syria. With them being diverted, the actors are playing their own game. So whether it's Turkey within the Kurdish area, or whether that's Iran versus Israel in the proxy areas. And the Israel-Palestinian tensions are increasing because of what's happening in Israel internally, but also an increase in terror activities in the Palestinian areas, right? So those are the 2 things that I look at closely. And this is within the broader framework of the fact that a lot of challenge to the US-led unipolar world order is coming from this region. It has a maximum number of mid-powers. This is where one of the very bases of petrodollar is sort of being challenged. But I think these are just very tortoise step. We're a long way from any significant challenge to how the world operates at the moment. Moving on to Asia. I love this heading. It's called the guns, germs, and GDP. I've already spoken of the militarization that's happening in Asia. Just to show you the graphic, as I said, Japan is 20%, China, India, Vietnam, Taiwan, Philippines, Australia, they're all on a budget increasing spree. A lot of them are buying very sophisticated sort of military weapons. They're increasing the military patrols, the freedom of navigation operations opening. It just increases the risk of accidental escalations. So I think we've said it for some time that the geopolitical center of the world in terms of the risks being created is shifting from the Middle East to the Indo-Pacific, where some of the very crucial supply chains and industrial powerhouses are based. In 2023, we're going to see a lot of beginning of these stress points in terms of realignment of the supply chain outside of China. How will China sort of open up after the COVID experience? How will they tackle with issues relating to their real estate, to their the internal sort of crackdown on tech that they've done, and also global recessionary tendencies. There are countries like Laos, Pakistan, Bangladesh have really been impacted by the global recessionary tendencies unleashed by Russia's war in Ukraine. So those are the 4 trends that we've covered in the report, along with interconnections, and we're happy to hear your feedback on those. We then move on to Africa. Africa is a very, very interesting space at the moment because, if I may use the term, it's the only virgin continent in the world, with its massive land resources, with a lot of positive changes happening within the population areas. It's a population that speaks both French and English. There's a lot of manpower talent, and there's a lot of I won't say rivalry, but there is a lot of thrust by all the superpowers, whether it's China, whether it's US, EU, etc., to start investing in the continent to take advantage of the region's available resources and in the many potential opportunities. But it's also a country where we've highlighted that the pot of instability and conflict just keeps boiling. It's a very unsettled continent. Ethiopia, for example, the president was given the Nobel Peace Prize a couple of years back, and today it's enmeshed in conflict. So things can change very, very quickly. You've got active conflicts in practically all the countries. There is the entire Sahel region, which is bound by insurgency, etc. And then there is a security tussle emerging in a number of countries, especially the sort of French-controlled or French-influenced areas in Africa. as French withdraws from active power, the security apparatus is being taken by the Russian Wagner Group. Right, a lot of these areas have the U.S. military bases, for example, Ghana, and that's also complicating the security environment of the region. Plus, in 2023 and 24, it's a long election cycle for Africa. I think about 23 elections, which are going to again unleash a lot of the lateral sort of tendencies of poor governance, of the economic and social headwinds that have been caused by the Ukraine war. A lot of the African countries have had to devalue currencies. They're highly import-dependent economies, which means that with a strong dollar, their costs have gone up. So in 2023, this is and beyond. This is what we advise businesses. There are a lot of risks, but there are opportunities as well. Intelligently crafted business decisions, for example, which either go beyond regions or invest in areas which do not require a very heavy physical presence or are dealing with the top levels of the government, for example, technology or digital assets or telecommunications can be good areas of investment. A lot is happening in the energy realm as well, especially as Europe looks to diversify from Russian natural gas and oil. As I said earlier, Algeria is a country that's really benefited, but Mozambique and sort of other countries are also building energy infrastructures that could be useful. You'll have to balance out the superpower rivalries. China obviously has an advantage here, but US is trying to make up for years of neglect, though it's going to take quite a bit of time. But even the Saudis, the Turks, and to a little bit Egypt, because it's embroiled in its own sort of crisis, are now starting to play up in Africa. So as most of you know, Dubai's biggest technology show, GITEX, is in Marrakesh last year. Morocco is also a very interesting area of investment opportunities, and we're going to be talking more about this in our later webinars. Europe, I will not be saying too much because Nicholas, immediately after the presentation, is going to take up a lot of these aspects. But Europe we're not painting a very positive picture for Europe in 2023. It's going to be impacted by high energy costs driving deindustrialization. There are a lot of social fissures, protest, instability. We've had protests for pension reform against Rishi Sunak's policies in the UK. Italy has a massive debt of more than 200%. And then there are rifts emerging within the EU on a variety of things, on the common defense policy, on how to deal with Russia, on the green taxonomy, on how the transition to energy should take place, how should the costs be divided. And so it's going to be very interesting in 2023 how the European Union navigates this and what is going to be the future of Europe. So I'm going to stop here and let our experts who are going to be talking about these trends in little detail take over. Thank you so much.